right, welcome everyone. It is February 11th,
Right.
2022.
Yep.
Just to go on the record. Super Bowl weekend.
That's it.
You got your picks in?
Of course.
Yeah.
You?
What do you got?
Who are you cheering for?
I
I'm
got
cheering.
I got the Bengals.
You got the Bengals?
Yeah.
Is
I
it
like
because
Joe
you're
Burrow. Like a
Icky Woods
swagger.
fan when you were a kid? You cheer for Icky Woods?
No, I don't know who that is.
Not a football player.
Yeah.
I'm cheering for the Rams then. That'll be fun.
Oh, interesting. A little internal wager, maybe. Actually, that's
Sure.
off the record. Off the record. No, I do that. Actually, it's legal most places now, anyway. So,
Yes.
all right. Well, as you just mentioned, busy week. Interesting things going on in the markets. Busy day in the market today, right up to the close. So why don't you give us the update?
Yeah. So today would have been, I think, driven a lot by at least market reaction. Seems like it's driven a lot by Putin saying that he may invade the Ukraine. It yeah, I'm not sure, but we definitely had a turning point when this came across the news wire today, and so markets kind of reacted pretty negatively to that. Interesting. What reacted, of course, broad equities sold off. So the things that did go up, which were US dollar, Japanese yen, Swiss franc, gold, oil and gas. So a lot of the things that we own actually went up throughout the afternoon here, and I've reviewed a lot of portfolios throughout the day today. Throughout the afternoon, saw a lot of people accounts flat to up into a pretty down market when you're looking at other things. So happy to see how the portfolios reacted to that. An event like war is such a black swan type event. It's hard to prepare for. So from that perspective, it's something that will be worth paying attention to. Of course, certainly, I hope that not where we go or it escalates to, but we have built the portfolio right now with a view that central banks coming with rate tightening into a slowing economy. This is just another wild card that could potentially derail what central banks are planning to do. So yeah, lots of cross currents, as I've been saying for 6 weeks now, happening in the world and the markets, and this is just another one to add to the mix, and a much different year than 2021.
That's for sure.
Yeah.
So, what did you do in the portfolios this week then, based on that news?
Yeah, so not too much. Continue to fine tune. Sold Win and bought bonds. Sold. We owned a company called. It was a SPAC that actually de-SPACed yesterday, I believe. Went to Black Rifle Coffee. So there was a de-SPAC, and the stock actually was up about 25% yesterday. So I switched that into bonds as well yesterday. So that was a nice switch. And so continue on that path where I think that rates have peaked. If not peaked, I think we're pretty darn close to that. And so continue with that path that want to own high quality conservative assets right now, bonds, US dollars, gold, and gold had a really good day today. So can continue with that path of adjusting where things are over levered one way or another. So yeah, same path, no changes.
Gotcha.
Yep.
Well, as always, if you have any questions, put them in the Q&A down below there. What else? Anything, or do you want to get right into everybody's favorite segment, which is Ben's charts?
Yeah, I think that
you
was
had a good one in the daily today.
That's it. Yeah, that was the housing market.
Yeah, that was a good one.
Yeah. So if you didn't see the daily, have a look at that. But
and if you can't get enough of Ben's charts on a weekly basis, if you didn't know, he puts one in the daily. I never read the COVID one. I purposely skip over that one, I gotta admit.
Yeah. It may be time to retire it. of
I think
course.
so.
Yeah,
I think so.
maybe
Yeah.
we'll add 2 charts in there then. And we'll
I
look
don't
for
know.
another
If you
theme.
like Ben's COVID daily COVID chart, leave a comment and we'll leave it
Definitely.
in
Let me
for
know
you.
if you want. I'll bring it back in. Otherwise, I've been
Or
thinking about changing it to Web3 chart.
or
Um,
or you know what? Since we like personalized service here, we'll get Joy to send it to you every single day. If you want it, just let
yes,
us know. We'll have Joy send it every single day to you.
there you go. Exactly.
I bet we won't have any takers.
I don't think so. So we'll do it today. We'll say we're changing that to a Web3 chart from now on.
Okay, good. Ooh, I like
Yes.
that.
Yeah.
I like
Yeah.
that.
Yeah.
Yeah, I watched a bit of that conference. There's a metaverse conference on this week, so I
Yeah.
kind of went in and out of that where I could. So,
Yeah.
you know what the biggest thing I took away from that? It's still a ways away.
Yes. Yes. Yeah.
So,
The mainstream adoption.
the mainstream adoption.
Yeah.
That's a very
Yeah.
good. Yeah,
Yeah.
very good point. Yeah, it's a
Yeah.
ways away.
Yeah, I would agree with that from the metaverse perspective. I think that from I guess the evolution of crypto into kind of mainstream asset allocation, that continues to move forward. Where like we see BlackRock, yeah, continue to move ahead with setting up trading desks and things like that. And Fidelity, who is one of the early kind of adopters to it from I'd say from a corporation perspective, they started buying Bitcoin in 2014, and Fidelity is a private asset management company in the U.S. And they do some fantastic research now on digital assets. And the other thing which I think we saw this week was I believe it was KPMG have added Bitcoin and Ethereum to their balance sheet. So that was interesting. KPMG Canada, that was. Yeah. Yeah. So, but now we can jump to the charts.
Oh well, let's not keep everybody waiting.
Yeah, let's get this teed up and send it on its way. All right.
There we go. I see it.
Yeah. Yeah, I see it. Okay. Yeah, this is consumer sentiment, and it is, I think, relevant now more than ever from the perspective that as we talk about like how do things progress from here? How do people feel about things? Obviously, lots going on around inflation. There's a couple other things that I'll talk about, but investor sentiment is is at the lowest level in a decade. So 2011 is the last time we got to these levels. And so as we look at this, it plays a part in what people do and how they act. And so it's an important piece of the things that I look at. And so I thought that was an interesting chart that came out today, and particularly as at least the central bankers start to talk about that. The other piece that I wanted to mention was just ISM number. And so, as I talk about things slowing down, we'll say, and I often reference we're getting a rate of change slow in all different places. It's I think important to look at the rollover. And so I've had conversations this week about, GDP going to stay elevated? Is inflation going to stay elevated? And I think the answer to both of those are yes, but we're going down from higher levels to lower levels in most things. So inflation, GDP, like ISM, PPI, like these are all going from left to right down. And when you get the rate of change, you tend to get like the future changing prices. And so in risk assets like stocks and houses and art and things like that, if you look forward and you think things are going to be lower in the future, you're going to look to be selling. That obviously extrapolates into lower risk prices. So it's another one of the inputs that I look at.
Gotcha. Good one.
Okay. Yeah. And the last one, which is some interesting research that RBC's been doing. I Yeah, every day when I get research pieces from all the different brokerage firms, RBC has started to track, at least fairly recently, they've started to track a global basket of stuff, we'll say. And I think it's a reasonable view on what people are living through every day. And, when you look at this inflation number, a big chunk of this inflation number is oil and energy and, stuff people don't necessarily deal with and touch every day. So it's hard to know what's going on. They started tracking, trash bags and dish soap and things like that to get a gauge for how these assets were changing kind of in prices throughout the world, and was it universal in the different countries in the world as well. And so it's been an interesting piece to look at it. And as we look at kind of where we are in the last couple of months here, is we are looking like maybe we're starting to see prices get a little bit softer. This is a 35-page report that talks in more detail around some of the other things happening and why some countries are paying higher prices than others. But it does look like we're starting to see prices maybe soften in certain areas. Prices start to come down, and it'll be interesting to watch this as another way to take a look at that inflation basket that everyone's concerned about.
Cool.
Yeah. So that's it for today on the charts. The most of the other data that I continue to talk about really hasn't changed too much. We continue to see GDP and inflation show that probably inflation's peaking. GDP, I think, a certainty that it's peaked, but we saw a big inflation number on Wednesday this week. I think it's either the last one or certainly the second last one before that number starts to head another direction. And as I've talked to clients this week, the second quarter of 2021 was the easiest comparable because the second quarter of 2020 was terrible. Because it was the worst time ever. Mm-hmm. So as we come into 2022, the second quarter of this year is going to have the kind of the hardest comparables that they've ever had in history.
Wow.
Yeah.
Okay. Good stuff. No questions yet. All right. So what are we looking at for next week, do you think? I guess it depends on what goes on with Russia.
Yeah, that'll play a part over the weekend. This week we saw Russia announce that they'll accept Bitcoin and as an actual currency. So that's interesting. But over the weekend, I guess we'll see what happens there. Shopify reports next week. So that's relevant to the TSX because they're heavyweight in the TSX. And the company's down about 50% from their November highs. So that'll be worth watching and paying attention to in the Canadian space, but more of the same. Let's see what happens. Right now, it seems like a lot of hedge funds are in trouble from what I've been reading and watching. So, excuse me, you're getting a lot of positions getting whipped around where you're seeing stocks down 25% or stocks up 25% as these hedge funds are forced into delevering. So it's kind of late cycle activity happening.
Yeah. Well, some of it seems to with some of the companies, like this time last year, it seemed like everybody was overachieving, and now the news is coming out that a lot of these companies are missing their numbers, right? Which is interesting as well.
Yeah, and the take on that typically, right, is as they start to revise and take the opportunity to revise lower and take the beating, you probably Q3 and Q4 numbers are going to look actually a lot better when we actually get there. But some of that I prefer to see them revise lower and adjust their forecasts, and then they'll actually beat likely in the second half of this year.
Right.
But yeah, you're right. Lot of adjustments downwards.
Definitely.
Yeah.
Okay. Anything else? Last call for questions. Gonna be a quick one today. Yeah.
Not bad. Yeah.
Yeah. Pack a lot of information in a short period of time, my friend. Good job. Okay, well, that's it. That's it. Okay.
Yeah.
Yeah, that's it. Okay.
All
right, everybody. Have a great weekend and go Bengals next week.
Go Rams. Take care.
Bye. I'm gonna edit that part out.